Hello traders, Vinny coming to you from theclosingprint.com, September 18th, 2022. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved lower after a hotter than expected CPI number. Interest rates pushed sharply higher and stock prices, as you know, push sharply lower. With that move lower, we did see a lot of puts monetized. So we are forecasting a pretty large move to start the week. Whether it's higher or lower is left to be seen, but we'll cover that in today's video. We do have 12 bearish indicators and 5 neutral with 3 bullish to start the week. S&P 500 support is at 3,800 and resistance is at 3,900. S&P 500 daily chart, RSI has yet to make a lower low. Price action has made a lower low. We did finish on a hammer. If we were to test the June lows, that's about another 6% to the downside. That would be a total pullback from the 200-day test that we saw in the second week of August to around 19%. So while there is a possibility of testing the June lows, we did have OPEX on Friday, so we're expecting a large directional move to start the week, which could be in either direction into October OPEX 5 weeks away. The Qs also made a lower low, so we do have some divergence there as well. We will keep our QID hedges depending on what happens this week. So we'll keep our hedges on with the potential test of the June lows after Friday's OPEX or a retest of the 921-day overhead with RSI giving us some divergence similar to the daily on the S&P 500. Once again, we have to wait until Monday or Tuesday to see what that large OPEX effect will have on price action. Small caps are in a precarious position. We had an outside week. So depending on what happens this week, we could either test the 50% retracement or we can come back up and test 190. Momentum is clearly more bullish at the present time with recent OPEX on Friday as potential fuel. As dealers and market makers re-hedge, we could push higher or lower this week. Considering the lower lows that we saw last week, we're a little bit surprised to see that VIX hasn't really pushed aggressively higher, and obviously something that would change markedly if we did take out that 3,800 support level to start this week. So we're watching for signals from advanced decline percent presently below zero and setting up for a bounce, while the McClellan oscillators for both the NAMO and the NIMO trending lower. Bulls will certainly have their work cut out for them this week, and bank earnings which start the second week of October. The bond stock ratio is pretty much neutral as bonds really aren't a place to hide at the present time. We'd look for this to spike higher as all yields spiked higher on that hot CPI print last week. At the same time, we did see junk bonds bounce near a recent support level and pivot. Additional indicators are neutral to bearish: IBB, IWM. Crude oil has been drifting lower, which is helpful for consumer discretionary. Bitcoin is flat near 20,000 and advanced decline is moving lower. So most of our indicators this week are bearish or neutral, and very few are bullish going into Monday trading. At the same time, the safety trade in the US dollar remains very strong, with momentum slowing a bit as MACD has turned, flattening out, with the potential for a double top or a lower high still in the cards for the US dollar. And with that moderation in US dollar strength, We did see copper trying to make higher highs, getting rejected at that 370, 378 level. We did make a higher low on Friday. So if copper begins to move higher, you know that this is a leading economic indicator. We are expecting the business cycle to enter contraction, so a move higher would be good for construction and builders in the short term. We also saw gold trying to hold this level at 1660, potentially a double bottom. Look for strength over the next several weeks. Similar to what we saw with silver, the Silver Trust SLV managed to hold on to the moving averages, looking for a bounce and for it to give us a higher high, along with some of the silver miners and junior miners. In addition, if we can see gasoline continue this trend lower, that'll help with consumer discretionary, which we'll cover in just a minute. Gasoline continues to fade, along with crude oil, which has been in a downtrend for the last 12 weeks, below the 50 and 200 day, 9 and 21 day. So this is very bearish looking for crude oil. Again, helping with consumer spending, while it's only one of three, with the other two, housing and food, still being very elevated, as the CPI print told us on Tuesday last week, but certainly a help nonetheless. Finally, we have the Crb Index. Commodities are starting to fade back below longer-term moving averages, the 200 day. So if we see a lower low this week, that would certainly help consumer discretionary again and help indices, maybe give them a tailwind going into this OPEX cycle for October. Finally, we see wheat turning the corner. Keep an eye on this one. There might be a trade going into the winter months as the prolonged conflict in Ukraine continues, with a potential long trade setting up over the last few weeks. Many of you in the trading room are watching this as well. Look for price to get back above the 200 day on Monday or Tuesday as your confirmation. Overall, commodities are mixed to neutral. There is potential more downside, which would help consumer confidence, while beginning to give consumers a bit of relief in the short term. Sectors have become a bit less bearish, improving somewhat. Still need to be cautious, with strength noted in consumer discretionary and in healthcare, financials, and some of the leisure and entertainment stocks. With rotation noted, we did see consumer discretionary moving from the improving quadrant top left to the leading quadrant top right, while the defensive sectors remain in the weakening quadrant in the bottom right. That leaves most sectors with stochastics more oversold than overbought, with the potential for a follow through this week as the spider hammer and the Q's hammer signified on Friday. There is potential for a bounce, as shorts did cover into the later stages of Friday's price action. We did have energy bouncing just above the 50-day moving average. Financials with buyers stepping up at the end of the day. And strength noted in an area which you wouldn't expect if the markets were going to melt down markedly from here. You'd expect to see consumer discretionary performing a lot worse, like Starbucks, making higher highs and higher lows. In addition to Tesla, which is holding on to its 9 EMA rather emphatically. With a move above 315, we'd consider completing this bullish cycle, the right side of this pattern, and a plus for the bulls with regard to consumer discretionary. In addition, we did see the international indices heat map improving as well, with Greece, Chile, and Argentina turning more green, while we're watching for these to continue this week. So watch Turkey, South Korea, Greece, and Singapore. In addition to those South American countries, also keep an eye on Brazil, which is holding right at its 50-day moving average. Might be an opportunity, something we'll watch for this week. Once again, we have a smaller list to start the week. While we focus on stocks like BJ's Wholesale Club, stochastics turning higher, volume was above average. On Friday, we did see a bounce near the 21-day moving average. We're looking for that to follow through. Along with many of the energy stocks like Apache, APA, Canadian Natural, both of those showing buyers at the lows on Friday. Celsius energy drinks, we're looking for that to hold the 50-day. Buyers did step up right around 100, looking for that to get back above the 21-day moving average. Additional energy stocks, Cenovus Energy, ConocoPhillips, Comstock rounding out the list. We're looking for healthcare stocks to follow through as well. We saw cross-country moving higher as we saw decent price action on Wednesday, Thursday, and Friday with volume increasing. We're also looking for cross-country healthcare to follow through, a company that provides staffing, outsourcing of nurses, temporary medical professionals, and some doctors in some fields. We'd like to see a push above 30.61, 10 cents above this pivot this week to confirm a breakout. Relative strength line is at 97, volume increasing. As you can see, the accumulation distribution rating is at A-. That's significant, and it has an EPS rating for its industry group of 99. Earnings for 2022 forecasted as 56% higher going into the third and fourth quarter. Devon Energy, Diamondback, both showing buyers at the lows of the day on Friday. We're looking for a follow-through in EOG as well. In-phase alternative energy stocks, solar in particular, doing very well. And with more people fixing their own cars instead of buying new, Genuine Auto Parts and other stocks in the industry group are looking good. Stochastics oversold, volume was above average on Friday, with Genuine Auto Parts showing strength. Earnings are forecasted for the third and fourth quarter to increase $7.97 for the year, with an accumulation distribution rating of B and a growth rate of 8%. Volume was well above average on Friday. Company has earnings at the end of October, with additional stocks from the group: AutoZone, O'Reilly Auto, Monroe, and Copart. Genuine Auto Parts has a RS rating of 94 and climbing as the stock breaks above this base over the last 6 weeks. Additional stocks from the Blue Dot scans and stocks showing relative strength: Wolfspeed, a manufacturer of power switches, RF devices, and silicon carbide and gallium nitride materials, showing earnings flipping back to a positive in 2023 and projected to move higher in 2024. With its competitors noted on semiconductor, Tower Semiconductors, and Global Foundries, among others, with high relative strength ratings, while finishing the week on above average volume. The company does have earnings at the end of the month. Iron Mountain also on a relative strength scan. You can see RS line is at 92 and climbing as the stock builds the right side of this cup pattern with a pivot 6% overhead, looking for follow through. The company provides records management, data protection, and information destruction services, with a more clear representation of that cup pattern on the weekly time frame, and 12 consecutive quarters of beating earnings. Last week's above average volume indicating that we should see a follow through in Iron Mountain this week. So look for it, and also look for the indices to be stronger to give us a tailwind going into Monday and Tuesday trading. Another healthcare stock, Census, headquartered in Boca Raton, Florida. The company develops radiation therapy devices for the treatment of non-melanoma skin cancer and keloids. We do see positive earnings starting in 2021, increasing this year 460% to $1.40 per share, a return on equity of 17%, and an accumulation distribution rating of B+. You can see how volume is increasing, and for the last 4 quarters, beating earnings substantially, with the company reporting earnings in the first week of November. Look for a breakout of Census Healthcare this week, a relatively inexpensive stock at $14.80. With banks' earnings about a month away, we're looking for Eastern Bank shares to continue this cup and handle pattern. Relative strength line is climbing at 86. Volume was well above average on Friday. You can see $1.39 per share earnings in 2022 projected, 45% increase over 2021. We're looking for this holding company for Eastern Bank shares, operating over 105 banking offices located in Massachusetts, among other northeastern states. Looking for that to follow through this week. As volume precedes price, we look for a retest of 2045 in the short term. Starbucks, as previously mentioned, is following through. The company currently operating 33,833 coffee shops worldwide. Earnings projected to start growing again. This year, $2.87 per share. Next year, $3.36 per share. The discount earlier this year was too tempting for us to pass up. We currently have shares in the lower to mid 70s. It did catch an upgrade last week from Piper Jaffray, I believe. As we look for consumer discretionary stocks to continue what it started last week, that strength in consumer discretionary is notable considering the market's made a lower low. So we're looking for relative strength to pick up in this sector, which would be an early indication of consumer spending going into the next report. Sarepta Therapeutics from the IBD 50, looking for a follow-through. This company develops RNA-based therapeutics using proprietary antisense technology to treat various genetic diseases. Relative strength line is at 98. Volume was above average and noteworthy on Wednesday, Thursday, and Friday when the markets were moving lower. Additional medical stocks like Shockwave, which develops and commercializes products to transform the way calcified cardiovascular disease is treated. Looking for relative strength line to hold this maximum 99 rating, with the company reporting earnings in 2022 of $2.55, again in 2023, an increase of 38% to $3.51 per share. The company has a composite rating of 97 with an accumulation distribution of B+, so that's telling you institutions continue to sponsor this particular stock, increasing from 524 funds owning shares to 618. Management owns a pretty significant position at 4%, with 71% of funds owning outstanding shares. Additional healthcare stocks. This one's Denmark-based Genmab. It develops antibody therapies for treatment of cancer and other diseases. Earnings of 95 cents per share for 2022, $1.12 or an 18% increase in 2023. It does have an accumulation distribution rating of B+, showing institutions continue to accumulate shares. Relative strength line is 87, looking for a break above 38.70 in the short term, with the next report tentatively for November 9th, with its most recent percent change of 471%, 7 cents versus 40 cents, for a substantial beat of 33 cents this most recent quarter. Cross-country healthcare on the IBD 50 this week forecasted to make $4.76 per share, a 56% increase over 2021. Looking for this larger cup and handle breakout with a smaller cup and handle that formed over the last 8 weeks. Looking for a continuation, while also noting since the 2020 lows, 9 quarters of beating earnings consistently, building to this cup and handle breakout above 30 in the short term. Acadia Healthcare showing relative strength line at 96, reporting $3.12 of earnings for 2022, estimated 2023 forecasted for a 9% increase to $3.40 per share. The company's accumulation distribution rating is at B, confirming that institutions are still accumulating shares, with more funds adding to positions over the last quarter, 2% held by management, and 75% of outstanding shares held by institutions. Looking for Acadia Healthcare to continue higher, with relative strength line at 96 and climbing. Volume was above average on Friday. Additional consumer discretionary stocks: Enphase Energy, designing, developing, and selling home energy solutions for the photovoltaic industry. Looking for a follow-through. First Solar also looked very strong. Enphase is my preference. I do have their products installed on our home. We're looking at 2022 earnings of $4.09 per share, a 70% increase over 2021. 2023 is forecasted $5.06 per share, estimated 24% increase. It has an A minus, an excellent accumulation distribution rating. We're looking at volume over the last 2 weeks that looks strong. Relative strength line is at 98 and climbing, with more institutions positioning in Enphase in the last quarter, with 53% outstanding shares owned by those institutions and 5% owned by management. Look for Enphase to follow through this week, along with First Solar, which has been showing relative strength with higher highs and higher lows, and relative strength line at 99. 2023 is forecasted to be a better year for First Solar. Do note it has an accumulation distribution rating of A+, excellent, and you can see that volume very clearly over the last several weeks as institutions continue to accumulate shares in First Solar and Enphase, among others, since the July lows. If consumer discretionary stocks continue to be bought, we'd look for restaurant brands along with Starbucks to follow through. Restaurant Brands is a franchise operating 29,000 restaurants under the Burger King, Tim Hortons, and Popeyes chicken brand names. Looking for a breakout of this 3 weeks tight pattern and a push above this pivot into the blue zone. A move 10 cents above this 61.79 level or 61.89 would be a technical breakout. Watching volume and earnings due out October 25th. $2.99 forecasted for 2022 and $3.19 for 2023. So if the trends in consumer discretionary continue, we could see a lot of these restaurants, consumer discretionary stocks, moving higher. Watch Starbucks and QSR, some of our favorites, going forward. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, September 18th, 2022. Do keep in mind that we are more neutral to slightly bearish at the present time. Even though we're in a short-term, intermediate, and long-term downtrend, we are looking for a bounce this week. If it doesn't come, then we're looking for a retest of the June-July lows. I'll send out a watch list later tonight around midnight on the East Coast and around 9 o'clock p.m. on the West Coast. So be sure to check your inbox for that. Otherwise, get outside, enjoy the rest of your weekend. Take care, and we'll see you on Monday.